All right. So let's jump into things. So we're on the road again, so we'll see how the sort of recording sort of setup goes. But regardless of that, obviously gives us a chance just to sort of have a bit of a sort of preview about sort of what's coming up for the week, and obviously just a little bit of a recap about how sort of things sort of finished up coming into the end of the week. Because obviously we had that CPI coming out, which was the first bit of US data we've had in, I'm going to say, maybe 4 weeks. So that thing has absolutely been sort of kicking on recently. And yeah, it's look, it's a bit odd sort of not having that sort of data to sort of really shape things so much. But anyway, we'll get into that in a moment. So what we can sort of have a quick look for, obviously sort of coming forward, is what kind of sort of data maybe we do have sort of coming up this week. From the looks of things, there's not a great deal sort of early sort of starting out. The way we've got durable goods. Well, maybe we should have had durable goods and all this kind of stuff sort of coming up. I guess this NA obviously means that that's obviously some of the stuff which would make sense that we're not actually going to be seeing come out of the US there. So let's go next week, this week. Okay. All right, so here we go. So, okay, you've got daylight savings ticking over. So this might actually affect things a little bit, just as to sort of when the data, not the sort of the data, the volume and that sort of starts to sort of come out. Sorry, let me start that again. When the volume starts to sort of come through and that through each of the sessions. So that's something to keep in mind, and that obviously coming through to this week as well. Moving forward, actual data that we have sort of coming out. We've got Bullock speaking again sort of tomorrow night. So absolutely nothing through Asia at all. A little bit of Japanese data, but nothing that's really going to sort of move anything. So very quiet start to the week there, particularly through Asia. Got Bullock talking later on. Bit of Euro data coming out. Nothing that's really going to be affecting us too much. We've got a bunch of 2-year and 5-year note auctions. Now, again, I'm not 100% sure on what we're getting, what we're not getting in that, as to sort of, I assume these NAs are sort of like, we may not actually sort of be seeing the data. So presumably we may still see these bond auctions. I actually, as I say that, I'm pretty sure that I did hear somewhere that they are still having the sort of the bond auction. So something, again, look, it's not going to be a massive market mover in that, but it's just something to sort of keep in mind as well. Moving along, so through to Tuesday, and that already is still not a great deal sort of stuff going on here. Business comps out of Italy, using a different economic calendar here. So we're getting a bunch of stuff that we wouldn't typically even sort of look over. So just got to filter through this, so bear with me 2 seconds. Consumer confidence coming out okay in, again, on Wednesday. I assume this is sort of happening here. We've got manufacturing numbers. Now, these manufacturing numbers are Richmond. So we have the Philly ones, we have Empire State, and then obviously Richmond ones. These tend to sort of fly around quite a fair bit in that, but it's, as we're sort of looking at the moment, negative 17, slight improvement to negative 14, but obviously still quite in a negative sort of position there at the moment. Though I don't think that's really going to be what the market's kind of looking for. What we're really kind of looking for at the moment, obviously coming up later in the week, is the FOMC. That's going to be the one that the market's really pricing itself around. So these aren't going to be anything that's really going to be sort of seeing the market move too much. All right, so on to Wednesday, we've got CPI coming out from Australia. So this is the big one that we're kind of sort of looking at, and mainly the quarter on quarter, which is looking like it's expected to be a fairly big sort of jump up here. 2.1 coming out to 2.3. Let me just pause this for 1 sec. All right, so I think we're going to scrap this here because I think this is a bit jumpy with the data. So back onto the normal one that we kind of use here. So we can see, so inflation looking to tick up a little bit there. Quarter on quarter looking to push up there quite a bit. And if you sort of listen to what Bullock was sort of saying after the last sort of rate decision, that in the press conference there, that the quarter on quarter is really the one that they're looking at. Like, yes, they sort of do take into account the sort of the year on year figures, and we are going to be changing pretty soon where we get a full monthly CPI. But what we're sort of seeing here at the moment is the quarter on quarter pushing right up. This is the one that they're really sort of going to be keeping an eye on, because you've got the two sides, the two mandates that they're trying to push for in that, which is, the same thing I say all the time in that, but it's keeping employment and like the economy obviously sort of ticking along, employment from getting out of hand. But at the same time, you can't lighten, you can't sort of cut at the cost of inflation becoming too rampant. And this is quite a significant jump up. If we see last print here, we've seen quite a sharp sort of spike up from 1.9, 2.7, 3, and obviously now expected to come in at 3%. But the quarter on quarter going from 0.7 to 1.1, I think that's really what the market's going to be sort of looking at, because if we do get a higher number here, it's really going to make the job a little bit more difficult for them as to sort of whether they can cut or cut more in the interim, in the sort of short term anyway. Because as they're sort of seeing sort of like, the inflation sort of start to move further up, you can't really say, hey, look, let's continue cutting into that if it keeps to progressively pushing up. And as we can see, it's quite a significant jump up the last 2 months. So I think that's really going to be what the market's kind of sort of looking for as to sort of what the sort of movements are coming into the end of the year. So maybe sort of Bullock might be able to sort of, I don't know what she's talking about on Monday evening. If we say anything here, more yada yada, due to speak through annual dinner, audience questions expected. Okay, maybe we get something around that there, but I think sort of, as I said, if you go back and look at the notes that sort of over the press conference of the last rate decision, I think pretty much in that. So what we're looking at is that quarter on quarter number. So that'll be the sort of first bit of data that's really going to be sort of moving the market a bit, in my opinion. Well, from what I'm trading anyway, sort of coming through the week. So quiet start to it all. After that, we've got a bit of New Zealand people speaking, nothing, boom, 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 goods trades balance, tentative. So I assume that's obviously, wait and see kind of stuff. It'd be interesting to see how long this is actually sort of taking for them to come back, because, I think they said 35 days was the longest that they've ever had a shutdown. It's about 4 weeks or so at the moment. So we're pushing up towards 30 days. But from different accounts of things, I don't think it's really sort of affecting Trump's sort of opinion polling, this kind of sort of stuff with it. So I don't think there's any sort of particular, they're not sort of blaming him for the shutdown or the shutdown sort of continuing out. And so I think with that, he doesn't really have any sort of drastic need to really sort of get it back moving as quick as possible. And he doesn't seem to be, he's off overseas doing a whole bunch of different stuff at the moment. So, it's, I don't know. It's just it's not even in the headlines. There's no sort of like, hey, look, they've almost made an agreement. Hey, they're working towards something. It just hasn't really been said at all. It's just like they're shut down and that's it. So, I guess obviously, look, whenever they come back, it'll come back at a moment's notice. So it'd be interesting how the market takes that. My feeling would be probably US dollar positive. But again, I guess it really sort of depends how long that sort of takes for them to sort of sort that stuff out. Moving through that, that's about it for sort of Wednesday there, coming through sort of Wednesday night / Thursday. Whoops, what have we done here? No. I was sort of ticked off there. Moving forward here, where were we? Wednesday night / Thursday morning. We've got Bank of Canada as well meeting, and they're looking to sort of cut by 25 base point. Seems to be pretty much on the direction that most central banks are doing. Obviously, sort of cutting at the moment, opposed to sort of holding so much. The Fed 4% down from 4.25, so 25 base point cut. I guess with this sort of stuff as well, having that CPI that came out the other night, that really sort of made you sort of think, okay, well, CPI. Actually, where is that data? I'll go back and actually reference it as we talk about it. Here we go, CPI here. So obviously, look, it's one of those sort of little grey area kind of bits of that, whereas 2.9% previously, market expecting 3.1, but it came in at 3%. So you can't sort of say, hey, look, inflation isn't an issue, because obviously it's moving in that strong, hotter kind of direction. But at the same time, it didn't move as much as the market had technically kind of priced, or sort of they were obviously planning for, and so they priced accordingly that the data may come out at that thing. And so, the price action around that move was very choppy as well. Like a typical sort of thing, failed to hit expectation. So US dollar sells off, but then, hold on, wait, it is actually up from where it was previously. So that's obviously sort of a bit more in those sort of like, I guess if you hawkish side of stuff. And so you saw the move undo very quickly as well. And so there's no real sort of clear cut direction. And this is what I was saying, because we haven't had any data out for almost sort of 4 weeks. This is what the market's sort of clasping at. They're like, okay, well, jobs, we don't know. That was pretty shoddy the last time we saw the data. But at the same time, we've got sort of inflation in this kind of grey area, whereas it's obviously not coming down, but it's not as accelerating as much as they maybe sort of thought. But you can see this thing sort of slowly drifting up here a little bit. So I think it's going to be a big question about sort of what they do necessarily. Maybe not necessarily what they do. I think 25 base point cut is pretty much locked in the bag. But as to what they sort of say they're going to be doing moving through to the end of the year, I think that's the big question. So 3 25 base point cuts, I think, is what people are sort of talking about. But of course, if they say, hey, hold on, wait, look, we may be sort of pulling back there a little bit, you may see that a little bit as dollar strength, that kind of move there. So yeah, it's going to be quite a busy one on the Thursday there. But you can see how busy this week is going to be. After CPI, we've got Bank of Canada, we got FOMC. Later that same day, we got the BOJ coming out, and BOJ don't really seem to be doing a great deal as much. I think the big thing with that over there at the moment is this new girl or new lady that's sort of coming into play. I don't know her name, but I think they're sort of expecting her to sort of follow suit of what they've sort of been seeing with that RB guy previously. If we jump on one sec. Thought I might have been able to sort of find something to point in the right direction. But anyway, the point being I think sort of with the BOJ, this new lady, I think seems to be coming out with a bit more of a sort of hawkish kind of sort of tilt towards things. So obviously they're looking to sort of hold their rates as is for the moment. So we'll sort of see how that sort of plays out as well. But again, it's just something that could definitely spike the market. So I think it's going to be very choppy around that sort of Thursday session. Ticking on after that, what have we got? Supposedly GDP, if data's back, but we probably won't be sort of seeing too much of that as well. And then Thursday night we have the ECB, and they look to be sort of holding rates. So Thursday is going to be just an absolute crazy sort of 24, 36 hours or so, with 4 of those sort of 4 major sort of central banks meeting there. So we'll see how that goes. But obviously sort of like holding rates. I'm not 100% sure what their outlook is with the ECB. So something I'll have a look into sort of like throughout the week. But obviously sort of holding rates could give some little strength to the euro, which obviously could sort of be a little bit of a weight on any sort of DXY sort of moves to the top side. Finally finishing off sort of through Friday, we've got sort of CPI out of China out of Japan, coming up there, a slight tick up. Again, maybe it says something. It's not really something that I really pay attention to as a big market mover, this data here. We got PPI out of Australia, slight little tick up there. So, with the Australian data there, it's looking like inflation is expected to be a little bit higher. So again, if we do get those sort of higher numbers with sort of CPI and PPI coming out of Australia, it could be something that holds the Aussie dollar up a little bit. But very much it's just going to be at the tail end of what happens with US dollar. If they start buying the US dollar, even if we have sort of slightly higher CPI and PPI numbers, I don't think that's going to be enough to save the Aussie. The Aussie just has not been able to rally on a few bits of sort of news data coming out this week. We had the sort of meeting with Trump and Albo sort of finally happen. I think, I don't know, however many months after everybody else. But basically sort of, there's a big deal that was signed and that, okay, yeah, we're selling minerals, all this kind of stuff. Aussie didn't even blink off it, really, to be honest. So for the most part, it's just been trading in like a $30-40 range. Got a little bit of a spike on that sort of slight miss with the CPI. But as I said, we'll get to the charts in a moment, and that pretty much sold straight into afterwards anyway. And then ticking through to the end of the week, we got PCE. Should it all sort of be back on board? So I don't know what's going to happen once we do actually get the sort of US government sort of coming back and that. Like, are we going to get a big flood of all this data all at one time? I would say probably not. I think maybe they will just sort of take as it comes into the next time. But there's got to be some sort of point where they sort of fill in the dots. But as to sort of, do they start sort of tallying those numbers when it comes back? I'm not sure. It's a very odd sort of situation with it all. And I think it's really just yet another thing sort of to be thrown in the mix to make things a little bit more difficult at the moment. So all in all, look, it's pretty quiet sort of start to the week, but certainly Thursday is going to be a crazy little period there. All right, so jump on to things here. So we've got, all right, so we've got Aussie. May as well sort of start off here. And this is what I was saying. Sort of like last week, I was saying, okay, look, up to around the sort of, 65.20, 65.30 area, and look for that sort of sell down. So obviously this little move through here. We got this happening. That's fine. We can kind of pop this out of the way just to clean things up a little bit. That little delete button. There we go. And clear this one up here. But all in all, you can see that obviously this top end here is really still just sort of holding suit at the moment. That's really the level that the buyers need to be able to sort of push it through. This is what I was talking about. We got that little sort of spike up. This is on the 4 hour. But if you have a look on the lower time frame, this is where that CPI came out. Aussie jumped on this off the back of obviously a weaker US dollar. Jumped from 65 straight up to 65.28. And then this is on the 1 hour. So within, 2 hours, the second 1 hour candle, it undid that entire move back down to this little support zone here. So what we could do actually is sort of start to fill this thing out a little bit more. I'll drag this across here and we say, obviously, for the short term, this is where our buyers are. Should we sort of come back down to it all. So it's almost like a little bit of a very frustrating not being on the normal setup. Everything seems to be running very slowly here. This is where the buyers are obviously sort of sitting for it all. Let me just pause this 1 second. See if things working a bit better. So I really think this is probably in the short term where we're going to be sort of seeing our next lot of direction. You could sort of drag this down here a little bit and sort of say, hey, look, we've got a bit more of a resistance here because obviously you can see spiked up to this zone and then obviously unable to close above it is kind of like an earlier indicator of where we sort of came down. So see how things open up sort of over the weekend. Hasn't really seemed to be too many sort of developments of anything that might give us any big gaps in that sort of coming into the start of the week. But certainly I think, your early indicators are going to be above maybe 65.20. But certainly if you break above 65.30, then you can probably start to look up to, 65.50s and these kind of levels up over here. But in short term, we have this little zone coming through here. I don't know what time frame this was on, but it doesn't look relevant now. So again, get rid of that one here. I would say certainly this, 64.90s, as I said, is a reoccurring number for it all. That's going to be your downside move. Underneath here, we could probably sort of drag this down over here. And sort of say that's probably your sort of target. Look, should it sort of break the 90s, you're going to see probably a test of that 80 level, which is obviously sort of tested and held a couple of times here. Should that break, bang, you're back down to bottom side of this range between 65, 60s. Which we know is, again, yet another level that's a reoccurring number with the Aussie. But really that 65.40 is the level that I'm interested in. And then underneath that, 65.20. 64.20 for these zones down underneath here. So look, let's just track these things out. They're the kind of areas that I'll be looking for if this thing wants to work. Yep. I feel like I'm working on some sort of 10-year-old computer. All right, bang. Anyway, for the point of it all, they're the kind of levels for the downside that I'll be looking at. Certainly, I think that's a pretty decent little trade. If you can get down under these 64.70s, 64.40s, I think looks like the reasonable sort of target. Just more or less kind of to sort of keep this larger kind of range happening here. But as you said, if we get CPI coming in a little bit hotter, that could be a good reason for the Aussie to sort of attempt at least a breakout to the top side there. And obviously, look, we've got the US, the FOMC looking to cut this week, which in theory, depending on how much of that is already kind of priced into it, which I would say is almost all of it, that they're going to be sort of cutting 25 base point, would be obviously a bit of a weaker US dollar. So in that sort of sense, a sort of, idea that the Fed might be sort of cutting, and if they particularly if they come out with a more dovish kind of outlook into the end of the year, plus a hot CPI from Aussie, that is the kind of combination that could get it moving out to the top side there. But just from a standpoint, I mean, this is on the 1 hour. It's amazingly slow, this computer. No. That should work. God. All right, I gotta pause this. All right, let's see what we can do here. All right, bit of amateur hour on this and that. One thing I can't stand is technical issues. But anyway, look, I'll sort of pause and sort of move it as we do it. But regardless of it all, on the daily here, you can see it's very much sort of being capped at the top side here. Look, I think, pretty much confirmation above sort of 65.30s and that. You could be looking up towards 65.80s. It does seem like it's got the support of the RSI, should it want to sort of move up to that sort of top side there. And particularly, as I said, with the idea that quarter-on-quarter inflation could be coming in a little bit hotter, that's going to sort of lead the market to be thinking, okay, well, they can't cut into this higher increasing inflation. That, coupled with a more dovish approach from the FOMC, from the Fed, that could sort of be what could actually finally get Aussie to sort of break out to the top side here. But again, if we sort of see that either the flip side of that CPI doesn't come in as hot, or if we do see, more importantly, the Fed come out with a little bit more of a hawkish stance, I think that still leaves Aussie quite susceptible to break to the bottom side here. I mean, really, this is what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions into this zone here right now. And realistically, you could probably almost sort of put it like that there. So if you're looking on a daily, a close beneath 64.80 on a daily is pretty much what's going to give you a target to sort of move down to those sort of 64.20s, which I do imagine to be quite a strong sort of support should we come down here, as we've seen it play its role time and time again. So certainly a daily close underneath 64.80, I think that'd be what we're looking for a downside. A daily close above 65.40, 65.35, that'd probably be opening it up, and you're probably looking at the 65.80s as the next target after that. All right. Flip across, we've got gold, because gold's actually, yes, look, it's been trading, I guess you could say, heavy. It's one of those things, like, you sort of see these big, massive sell downs. Like, I think this was the biggest percentage sell down since 2013. And then, obviously, in terms of dollar terms and that, it's just the biggest you've ever seen, because obviously the percentage of where it was in 2013, even if it's, I think it was 6% or 6.5% or something like that, but 6.5% in 2013 of whatever it was then, $1,400 or something. Well, now it's nearly 3 times that. So it's obviously the in terms of the actual buck move, even if it's the same percentage, will be 3 times that. So it got absolutely sort of demolished in that. I covered this sort of through the week. It was actually a very good trade for myself and that sort of through that period there. And we've seen it sort of like really sort of like, hit that little price target that we had sort of set up with the double top. And it's really sort of consolidated here. But as you can see, this little move coming up here to basically sort of come up and test that bounce high, really played out very nicely and sold down into there. End of the week, look, it's holding this rising trend. So I think this is going to be an important rising trend. I think 4,000 is really going to be the key for it to sort of get underneath. I think if you start to close underneath 4,000, you're going to start to see a bit of a snowball effect in that. I think sort of 4,000 kind of like, it's one of those sort of like, apart from the fact that it's a big psychological number as well, it's going to take you out of that sort of little bounce low from here, from that actual full sell down. So then you're taking out those swing lows. Doesn't mean the whole show's over, but I think certainly once you break the trend, price needs to be punished accordingly. And I think that really does kind of mean you're going to be coming down at least probably around the 37s, 3,800 mark and that. And look, that could turn out to be a conservative drop off for gold. We've just got to see how the landscape falls by that time, because again, if we see that the US comes back and maybe given the right sort of like, you sort of ask, what would be the scenario for this to sort of come down lower? Well, it would be something in which the Fed was probably a little bit more hawkish. We saw yields probably pick up a little bit. We saw, maybe sort of the Russia-Ukraine kind of situation dissipate a little bit. Because you think, what are the pillars that are holding up gold? Well, Israel was the Middle East situation. That was one. That didn't really seem to have a great deal of an effect on things, to be honest. And that once they actually resolved it, they pretty much finished that on the Friday. And then the Friday afternoon, they tagged out. And China trade war became the next sort of replacement. But, even though that China trade war sort of stuff, okay, that kicked off, market very much obviously sort of hammered into gold, despite that sort of new latest developments on that sort of front there. The Russia-Ukraine thing, okay, it's ticking on. The shutdown from the US government, these kind of things. But should those things be taken away, the pillars that hold these things up, plus then you get the technical aspect of it breaking that psychological barrier of 4,000, plus you get it through this trend, which has been sort of, this is the trend that's been sort of set up. Jeez. Yep, cool. So this is the trend that's sort of been set up since that breakout at basically end of summer, so last week of August there. And as you can see, sort of coming back down to these levels over here, it doesn't really fully put a massive dent on the size of the rise that it has had, but you could definitely see that shake out a little bit. I mean, if we sort of zoom this out here now, this fibs that we've got set up here with the white one, 38.48 is still just the 50%. You could still see that overshoot line up with this sort of littler, not massive zone that we had down here, but obviously it's springboarded around that sort of 37. That's the 61% retracement. And this is the thing that I think if we do break this trend, you break that psychological level, coming down $300, it sounds like a lot, but this is the new world that sort of gold is trading in. Well, as of the moment, if it happens to sort of shoot $200 or $300 in one direction, it's not like, wow, we've never seen that before now. It's changed the kind of parameters in which sort of gold trades. So I used to sort of say, well, I've been saying sort of used to trade like Aussie, nice and slow and this and that. I remember sort of saying, look, I remember gold being good for $5 or $10 through Asia. But now sort of like, we've seen these things move 100, and that's not even like the busiest kind of days. So look, I think there's still an overall case for gold to be going much higher, but I'm pretty sort of open to the idea that we could get a fairly deep sort of washout, particularly underneath 4,000, even of a couple of $100 coming back down to these sort of levels over here, and then reassess where the market's at, where the geopolitical situation's at, so on and so on from there. But as you can see here at the moment, look, I mean, this trend, that's one side of it. The other side of it is that this trend holds. And we sort of say, hold on, wait, here's a little bit of a sort of range that we're sort of finding ourselves in down here. And this little breakout box. So the alternative is that potentially you get back up above sort of like, 41.80 or so, or 41.60, 41.80. That trend holds. You're probably still going to have a bit of issue, I think, coming up around that 4,200, which was that swing low of the double top. But certainly above 4,200. Should you get up above here, I think that's when you could say, hold on, wait, maybe it's still, the trend's still going. I mean, as of right now, it has held. So that's what I'm going to put this here. Very slowly with this system at the moment. But I would say back up above that level there, we could see this really retest the highs. Because this is, this is the structure it's trying to force down underneath here. I mean, this is 3 attempts at this zone here now, which the market has happened to hold. So, if you fail to move in one direction, you've really only got one other choice, and that's to push back up in the other direction. So as of right now, it's above trend. So, I mean, it is still technically classed as bullish. I mean, despite this heavy sell down that we've seen through here. But I think that realistically, I think sort of we probably are going to test through this trend at some stage. But there is a potential, obviously, for this thing to squeeze up a little bit higher before we do come down lower there. It still seem to be having a little bit of tech issues here. But look, if we zoom in this here and we could say, okay, I mean, that's all very well to sort of speculate, okay, what could happen? What could be the right setup for this stuff to happen? as of right now, we are actually finding a little bit of a range down the bottom side here. So I think sort of really below sort of 40.50, yeah, you've got these wicks and all this kind of stuff to deal with. So I think sort of till you get a good solid close outside this underneath 40.50, there's obviously the potential for this thing to sort of flick back up the top side here as well. And likewise with the top side moves, I think you are going to find a bit of issue with 41.85 and with 42.15. But should you get above that 42.15, then I'd say, okay, look, trend hold, bang, and you're moving up a little bit higher there. But I think in the short term, what we could sort of say is pretty much above, 41.60, below 40.50, which gives us about $110 range. I think a close outside those two, 4 hours or above, that should give us some decent direction that we can trade off. We got silver coming back down. And so silver came right down into this zone here. And this is pretty much trading right on point for what we were sort of saying. This was the plan, that we got the big sell down through here. We were expecting buyers to step in here perfectly, which we have seen. They've come up here, clipped those stops, which I was saying, if you look at like whatever day it was, maybe the Wednesday, the Thursday, I was, look, this is where your stops will be, just above these highs. Comes up here, clips them out, and what does it do? Shoots down straight afterwards. Unable to break through this level here, but it really did. I mean, this thing is very much sort of structurally playing out very well. So it's important to understand sort of how these things generally sort of will try to sort of play around. So the fact that it's failed to sort of actually break through this zone here means that obviously, just like gold, we've got a little bit of a range that's sort of forming through here. And this is most likely what's going to give us our direction as to where we're going next. We've got our price targets for downside moves. So if we break through 47, pretty much we're looking down to say 45.80s, 45.90, looking down underneath that 43.60s. So we know the sort of where we want to go should this thing break down to the top, down to the bottom side there. But again, there's always the possibility that we do see a little bit of a rally effort of these things coming out here. And this will come with most likely a bit more of a dovish Fed. So that's why it's going to be very important sort of moving through that Thursday session this week, because one, we've got so many central banks that are happening, but the Fed's going to be the big one. I think it's going to define stuff. A break up above 49.80, pretty much call it where those all-time highs were previously. A break up back up above there, or then you're probably most likely going up to 51.28 and this kind of neckline test that we had there. You might find a little bit of resistance in this little sort of swing low point here where the sort of spike came down underneath, but I don't think that it may, if anything, that it put a little bit of a sort of a little stop in it, but I don't think that'd be something to really sort of stop it and see a turnaround. I think if you wanted to say, if we do get a break above that sort of 50, call it 50, 49.80, whatever, that kind of zone through there, up around 51.37, then you see what the sellers are going to do then if they want to drive that back down underneath there. But certainly, I think just like with gold, it's trying to base around here. I mean, you got to remember that it's still only a little bit off the all-time highs. This last little move is what I've sort of measured here. But, that's only just its last little move. Remember, it had this big sort of build-up prior to that. So 50% of the last move up, that's fine. But it's still only about 23% off its all-time highs or so. So, it's still considered quite bullish. But this is what I'm sort of talking about, how, the break of the trend, price needs to be punished accordingly. And this is a good indicator of what we could be expecting to see should that daily time frame, because this is on a 4-hour, but if we saw that daily time frame, which is obviously more significant on gold break, I think things, and this would call this sort of the 4,000 zone for gold, where those wicks were down the bottom that we saw with gold, should that 4,000 break, I think we could see quite a sort of significant drop off in gold. Because that's the thing, sort of with the trend will hold as long as it's obviously above it. But once that trend breaks, price needs to be punished accordingly. And so we're going to see quite a significant little comeback. And again, I know flipping back onto gold here, but coming down $300 is not the end of the world in the grand scheme of things. Like this thing sort of run up, I don't know what, I think 1,600 or something this year. $300. Yeah, I mean, it sounds like a bit, used to be a bit, But nowadays in that, it's still a large move, but it's not like, I mean, you're not undoing the whole move. When you move $1,600, coming back 300 is not really a full shake. Anyway, point is, we'll look at it silver here. So I think, again, look, it's a little defined sort of range through here. A close outside these two might be what gives us our indicator, well, should be what gives us our indication of direction. But at the same time, if we do see a little bit of a rally up, I wouldn't be surprised if we see this range continue, at least sort of moving towards Thursday when we have the FOMC sort of coming out. If we took it across quickly, we've got DXY. And this is what I was talking about with DXY. I mean, look, DXY has been overall a little bit, look, it's been looking better than it has over the whole year. Structurally, it's working not too bad. We had that little inverted head and shoulders. Almost sort of played out. I was looking for 99.20 and it came to 99.13. So very close to it all. But as you can see here, even with that CPI missing target, it obviously had that textbook reaction where it just got dumped. But all it did was retest the neckline of that inverted head and shoulders. And then bang, that's quite a significant little bounce coming up there. And even as you can see this now, this is also starting to hold itself a little bit of a range through this area. So it's like the market's just really sort of going into a holding pattern the last couple of sort of sessions. And that's the thing that, consolidations and ranges, they tend to favor the direction in which it sort of led into it. And in this instance, we're seeing US dollar strength as it kind of like sort of ranges through here. What's it been doing? Well, it's been actually burning off that overbought RSI. So now we're all the way back to oversold, still in its consolidation range up towards the highs here. I think this still has a plausible chance to be seeing this move coming up to the top side here. I do think it's going to be a little bit tough for it to sort of get through this 99.40, 99.30, this kind of zone. We did have that measured move. I'm going to get rid of that just for the moment. But I wouldn't be surprised, should we get a bit of a push, that to see a sort of bit of a US dollar sort of play out through here. Again, look, it's going to come down to the wording of the Fed. If they cut 25 basis point, I don't think the market's really going to be shocked by that. If you look at sort of how much the Fed Watch tool has been sort of pricing this thing in, it's like 99% or 98% or so chance of a sort of 25 basis point cut. So it's not going to be like a shock if they cut by 25 basis point, but the wording and the plan of the Fed moving through into the end of the year, I think that's really what's going to be giving us the direction. But again, maybe with that sort of coming up, we just see this continue to range, and we see these other bits and pieces that continue to range coming into that rate decision on Thursday as well. But from a structural standpoint, you would think that this is probably going to get a body fill back up around here. So that 99.40 is still where I'm sort of looking to sort of target. Obviously, confirmation of that'll be a sort of close above 99.15, take out those highs. Flip it across quickly. We've got copper. Copper had been holding up very well, probably best of all the metals in that more recently. As you can see, everything else is obviously selling down, consolidating on its lows. It's back up into that resistance zone. But if we drag this out pretty much higher here, all in all, we are actually getting a bit of a range sort of forming with it as well, albeit a bit of a sort of choppy kind of one. But at the moment, we're not really sort of seeing it. Look, it's an inability to sort of break down. This is what I'm talking about. So once prices push down, eventually after a while, it's just like, it's not moving in this direction. The only other direction for it is to move back up over the top over here. But really, it needs that close above sort of 520 to sort of see a further sort of move to the top side there. Again, could be happening this sort of week with it all. There is in the background as well a little bit of sort of Xi Trump talks. I did sort of see him sort of say that apparently he's putting a little bit of pressure on Xi to sort of trying to push Xi to push, Jesus, it sounds crazy, trying to push Xi to push Putin to resolve that sort of and end that sort of Ukraine war at the moment. As to whether they do that, who knows? But I know he's using that as a bit of a sort of bargaining chip, in terms of their sort of trade discussions as there as well. Obviously, any of that kind of stuff resolving, I think is going to be positive for copper. And finally, just with the yuan, we're sort of seeing this still really maintain this. Get this onto the daily because that's about the only thing we can use with a sort of reasonable sort of takeaway. But as you can see, it's really just super tightening up here at the moment, but unable to break out the bottom side of that range. It's really flirting with the idea of being on the underside of this major trend. But as you can see, it's just become super, super tight through the last kind of sessions here. And this is why I say that sort of like, this is going to be a good proxy for what happens with the Aussie, because as you saw with the Aussie, that's pretty much just range for the last 6 days or so, 6 candles. We're seeing the same with the yuan here as well. It is sort of consolidating at the bottoms here, so it does make me sort of think about it. But again, on the daily here, it's very oversold. Doesn't mean it can't stay and obviously break lower if it still is oversold. I think a close underneath sort of 711 will sort of probably signify that. Probably look to sort of come down and test 709, 7098, that kind of area for the bottom side there. That's going to be a major break should it come down underneath over here. But at the moment, we're sort of seeing it really just sort of basically holding pattern. And it is when you look at these charts, like sort of side by side, you start to see that a lot of them do replicate each other in the sense of we had some drastic moves, albeit the metals obviously the most drastic move there. But really everything's just sort of going into a little bit of a holding pattern. And I think this is because we don't really know what's going on with the US. We're still waiting on any sort of data to be coming out. CPI was the first one that we've seen in a while. But we've got no idea about what the situation or the state of the jobs market is. We'll see how we go. Obviously, we're going to get that FOMC sort of coming out. Does I suppose Powell's separate to the US sort of government? Obviously, he's still working there. So it's a bit of a sticky situation, and I just don't have 100% clarity, and I don't think the market has 100% clarity. And without that clarity, I think this is why we're seeing things move around. I mean, look, the markets are obviously going to be sort of positioning themselves, but we're not seeing any sort of drastic moves other than in the metals and that more recently. So I think, this FOMC will be a big one to sort of get out of the way, but got a couple of days of quiet sort of price action coming into that prior. So we'll see how that plays out. All right, that's it from me.